G'day everyone, Nathan here. Welcome to our November/December update. I'm just sort of wrapping up 2 months update all in one because there's hardly going to be any massive change from now until end of this year. Look, with the blink of an eye, this year has just gone, and I look back and see what a massive year it has been for all of us. You know, coming out of lockdowns and masks and all that sort of stuff, it just feels there is a light at the end of the tunnel. So it just shows how much resilient we are and how much we've all come together as one big team, and just coming out of that, all the lockdowns, and now sort of started to live like a normal life. Even though when I say normal life, I don't know what a normal life looks like these days, with everything that's going on, but it is the new normal. It is going to be the way forward, and it is what it is. So we all try to be quite positive in our office. We can control what we can control, and what we can't control, we just can't control. So just on that note, I'll probably start on the market update. We've been pretty busy in our office and look heavily dominated by first-time buyers. No surprises with what I've discussed before. From 7th of August, the government made a massive change in the CCCFA. You just need 5% deposit to buy a first home. I think if we're doing 10 applications or 10, 15 applications in a week, I think half of them are first home buyers right now. So that segment is really winning in the current market, purely due to 5% deposit, and the rates are still sort of realistic what they used to be before COVID. So as a Mr. and Mrs., if your income, your jobs are secure, the repayments are still sort of, for typical 550, 600k property, the repayments are still sort of 550, 520-ish, more or less what you pay in rent. So that segment is really winning right now because there are some great deals, affordable properties across town, no dramas there, and I think that's going to continue next year. Someone who's selling and buying, it's a little bit different in different patches. So I'll give you an example. We've got a lot of clients buying in Kashmir, High School Zone, Lincoln High School Zone. You've got Thorrington Primary. That sort of lower parts of the hills is on fire. Multi-offers, auctions being brought forward, deadlines being brought forward. So it seems like now we are in a little bit patchy into Brentwood, Maryvale, Fendleton, multi-offers. It's just a little bit different in different suburbs. Preston's were in huge demand. Preston's is a little bit slow right now. The prices went too high too quick in Preston's Marshlands, but that area is a little bit slow. Whereas in Kashmir, it's on fire. So it is a little bit different for selling and buying. Often if you're selling and buying again, you're going with a bigger deposit, because if you've bought property 3, 4, 5 years ago, you've got a huge capital gains over the last 3 years. So that segment is still trading all okay. No problems there. I see that still carrying on as normal for the whole year next year. Well, I'll surely keep you updated if anything will change. Refinances, restructures, doing a lot of those. Most of the banks, they're throwing a lot of cash to secure the business. As you would have seen in the news, the lending of most of the banks is down by 30%. 30% is what the lending is down, which is crazy because the house prices, they're down probably around 15, 20%. And crazily enough in Christchurch, I think I looked at a couple of weeks ago, they've gone up by 2%. So Christchurch market, it was different many years ago, it was different a few years ago, it is different today. I believe it's probably the safest and most resilient market in entire New Zealand. So forecast for the house prices is, I think we're not going to see any boom sometime soon. It'll probably be just business as usual, sticking along, and we'll see how we go next year. Interest rates, it's no brainer. Look, the rate's going to go up on hopefully 23rd of November. That's where the last OCR review is for this year. Next one would be in February. Everyone is predicting, look, the OCR is going to go from 3.5% to 4%. So the banks, again, borrowing money from Reserve Bank, their cost will go up. They'll check the margin, and 1 year rate might be 6.19, 6.29. I strongly believe, like I've said before, I will be super surprised if the 1 year rate will go more than 6.5%. I think we are at almost 95% at the peak. There may or may not be another rise in February next year, and hopefully that's it. Again, everyone's situation is different, personal financial position is different. Always recommend to have a chat if your loan is up for renewal, you're looking at restructure, renovations, refinance, buy a car, holiday, consolidating debts, whatever your plans are. Hey, look, we're always here to help. With the banks throwing a lot of cash to secure the business, it might be a good idea just to have a chat and see if there's any opportunity for you guys to get a better deal. Hey, if you can get some cash that's enough to pay your rates and insurance, why would you not do that? It's no-brainer. Coming from the interest rate, look, yeah, all-time high. I think we're going to go into Christmas with pretty high interest rate. 1 year might be 6.19, 6.3. So, and I think that's it. So hopefully the rates will start coming down from April, May next year. Hopefully. But surely we'll keep you updated in the new year. That's it from us. Bit of an office update. Look, we're working behind the scenes on a lot of stuff. As you know, with your help, guidance and support, we've grown a team, and our commitment is always here for you. 90% of our business comes from our existing clients, word of mouth, and 10% is more sort of from social media. So what I'm trying to do is to set up more structure in place. We've got some really cool and exciting things happening in our business, putting more and more management structure. Not that I don't like management, I think I can manage it really well, but I really, in my gut, I really enjoy helping my clients, talking to the lender, because that's my biggest strength. Is the knowledge of lending, is the negotiations I can do with the bank, and for management side of things, look, it's been pretty full on for me, writing business and managing the entire office, 18 odd people. So I'm doing some really exciting things to have that structure in place so we can continue to deliver the same level of service, same level of support, and be as easily accessible as I was 4 or 5 years ago. So just on that note, I want to say, look, I'm always here to help. Ring me directly, email me directly for any random thing or anything you've got in your mind, if you're my existing client. That's it for me. I'm moving into my own home. We started building a home beginning of last year, and we just got the keys just day before the long weekend, the Canterbury anniversary. So pretty excited. We'll be moving in next week. It's in Marihau, and yeah, it's close to work, close to kids' school. So pretty excited to actually just settle down over the Christmas time and have that sort of more stability for my kids. Thank you very much, guys. Wish you, your family, a very Merry Christmas, time at the beach, tennis, barbecue, whatever your plans are. I just wish you, all of you guys, a safe holidays, and I look forward to catching up with you next year. Thanks very much.